Well, this is new. I keep getting asked the same old question. What do you think of the markets? Why are you so negative at the moment? Yeah. Firstly, I want to say this is entertainment, education, no advice. You want that, go somewhere else. But, I want to talk about, how's my view changed since one of the videos I did with Torsten in the grey market talk in November, and again in December, and again in January. I said the same thing. I was still very cautious. And as you see from the charts, actually nothing's happened since then, even though we had the big Trump rally after he won the presidency. So let's have a look at some charts and see if anything can give us some more clarity as to what's going on. So I think the first thing we'll look at is the S&P. These arrows up here, basically the videos that I did with Torsten when I first said, I'm looking for a bigger correction. I think at this point here, I said down to 5,200. That's its little box down here. And then we did another video. I didn't change my view. And then we did another video and I didn't change my view. And the bottom line was, the following was, I don't believe you can change 180 degrees policies of the Biden administration, without causing either some disruption or causing some angst or asking people to think about the risk premium in the markets. Are they being paid for the risk they're taking? And my feeling is, if I was really into this market, I'd be saying I'd probably want some more return from whatever I'm buying. And, I lightened up on crypto, I lightened up on stocks, and I still feel more cautious about the markets and, how far down it can go. We can argue about that. Is it going to go to, 5, 6? That's this little box down here, or is it going to sort of go all the way? It's nuanced, but broadly, I see still some correction, as you can see, since November, when I first was cautious about the market. The market really hasn't done anything. And of course, everyone's getting all excited about these, Trump tariffs and stuff like that. I mean, sorry to say this, but, the market structure, the emotion and everything, that's already been in the market, whether you look at, the peso or the CAN dollar, these things have already fallen out of bed for a long time. So you want to get the tail end of that move, good luck. But that's not how I would think about these markets personally. So let's have a look at the big stocks in the markets. Let's have a look at Apple. Find it. So Apple, here we go. What's my chart on Apple? It's this one, isn't it? Yes. So this is, again, what do I see from this kind of structure here? Apple has been rallying for, you can see this thing here, for a very long time. I mean, it's kind of done very well as a stock. But I still get the feeling that it's not really showing the power that it once had. And so the way that I see it is some kind of correction. So I'm looking at this thing having topped and possibly looking for a correction. Firstly, down here, down to this level, and possibly down here. And that's a real big sell-off if we were to see that. And because of the risks on the downside, I can't get too excited about owning Apple right now. And don't get me wrong. I mean, these markets are, there's still some great opportunities for a number of stocks there. But for these bigger stocks, Mag 7s, I think there's a lot of concern in my mind as to where these things will end up. And, as I say, they've had a good run. So perhaps there's some rotation, sell Mag 7, go and buy something else. I still quite like these trades because, as I say, there are still a lot of stocks out there that do show promise. But when I look at a chart like this, it's very easy for an Elliott Wave guy to just look at stocks in general and say, look, 9 times out of 10 stocks go up. So unless you're breaking the 200-day moving average, you've got to go and buy something and go buy every dip. Well, as I say, there's something that feels more risky in this environment, and therefore, as an investor, I think this might be the time where you want more risk premium, and that means going and buying stuff at lower prices, or at least taking profits on stuff which you've had a good run. So, of course, the other big stock is NVIDIA. How quickly these things turn. Let's see, which is my sort of NVIDIA preferred count. Probably something like this one. I think so. Yeah, it's got that purple thing there. So I look at what's my preferred count. We've been looking at NVIDIA and saying, hey, this is the darling of the AI. It's going to be the beneficiary of everything AI, and everyone else is going to be paying to play the AI game to NVIDIA. Well, all of these experts didn't see something coming, a technology development within the AI world that suddenly said, oh, perhaps, it's not going to be just NVIDIA who's going to benefit from AI. And, again, if you've been owning NVIDIA and you've bought this thing from, I don't know how low, well done, $40 equivalent, after the stock split, and you're at 150, well, you might want to say, maybe I need to take some profits, maybe go and buy something else, maybe something else it can be benefiting from, some technology development. And where is NVIDIA right now? This blue line is 55-day EMA. The purple line is the 200-day EMA. We're at the 200-day EMA. If we were to break down, a big if, I know, but if we were to break down, I mean, you could see this thing really attacking now. Ignore I haven't drawn this thing to any particular target, but we know from how Elliott Wave trades, how Elliott Wave guidelines are, that you're likely to, if you can see a correction, you're likely to see a correction down to the fourth wave of the one lesser degree. Now, on the way, ignore the degrees where I've labeled it. So I've got yellow degree, or what that means. The one lesser degree is the green degree. Wave 4 of one lesser degree is a damn sight lower. You can't even see it on this chart. So let's say I've got my degrees wrong, and we're going to go to the fourth wave of this blue degree. Yeah. So first correction is still below 100. So again, for me, if this thing, when this thing was trading at 150, 140, 150, and everybody was dreaming about this train can't be stopped. Well, obviously, it's been at least paused. So Apple, NVIDIA give me some cause for concern on the big stocks. So therefore, as I say, crypto as well. I don't see a big bear market. I still see the cycle as being bullish for, stocks and crypto later on. So, March onwards or thereabouts. But until then, I still think that, caution is probably warranted. And therefore, I thought I would repeat myself for what it's worth on this short video. And I mean, very quickly, I'll sort of put up where the S&P, or what I think of the S&P. I showed, I think this is sort of where I'm seeing this thing. Originally, I thought down to this sort of green box. You don't need to go all the way down. But if this thing is going to see some retracement, and we don't know how far down it's going to go, I'd rather have some ammunition to go and buy some stuff when it does go down. So therefore, when it starts to turn over, if it starts to turn over, then I'll try to sort of, measure just how deep it's going to go. And until then, as I say, ammunition. And we haven't broken down. Yeah, I mean, so I understand why every analyst, every Elliott Wave analyst sees the simple way to sort of monitor stocks is to say, look, they go up forever. So you're going to make 8% a year. So the trend is basically, always up. And then it's sort of, there's some corrections along the way. So you're going to be right more often than not, just to assume, that the trend is up until it is. And, that's fine. I don't always play that way. So I think there are times when you can be cautious. I don't say, you go short into a strong trend. You don't go short above a 50-day EMA. There's no reason to do that, but there is a reason to be cautious. And you can think about shorts at another time. But as I say, I'm cautious. I see this thing looking more toppish than looking bullish in this environment. As I say, from a macro perspective, I think there's every reason to be uncertain about how the new policies of this administration are going to play out. So, Scott Bessent, extending duration of treasuries, Trump tariffs, don't know what effect that's going to have. This is a reason for caution. And we know that liquidity is generally tight. Money supply, in my view, is still fairly low. That means that the economy itself just isn't seeing the money flow into it as it used to. You look at the GDP now, things aren't running away. So, I don't say slowdown, I don't say recession, I just say caution. And so that's how I'm going to end this little video. So until the next one, hope you enjoyed it. Any questions? Stick them in the commentary. Thank you very much.